Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is for Friday, February 28th, 2014. A couple considerations for the coming trading session. It's going to be the final trading day of the month, so this is going to be where everybody gets marked for the month. So just be aware of that. Always could be those little micro agendas moving through the market, so make sure that you don't get swept in or out of positions unnecessarily. The other thing to keep in mind is that we did have kind of a decent walk up at the end of the day today, and oftentimes that is really where the true markup comes, rather than the actual last day of the month, because traders don't like to get caught with their hands in the cookie jar, so to speak. So it's usually more the absence of selling rather than anything else, and certainly I think we saw that in the afternoon. So what we wound up with here was definitely a positive day in the ES futures. We're up 12 handles on the day. Look at the levels in just a little bit. The NQs were up about 28 handles, and the Dow was up 74, which really kind of lagged everything else. The advanced declines on New York were fairly decent, plus 1,000 issues, but we're only plus about 700 on NASDAQ, which isn't really all that impressive, being up 27 handles. All right, let's take a look at the pure price charts here. Here's the ES futures. This represents the broad market side. One definite development here was that while we did not make a new high on the move, the previous high was already in place, we did make a new high close on the move and did finally break out and settle above the previous highs that we had seen in January. So that's definitely a positive for the broad market bulls here. And here's a look at the NASDAQ side. The NASDAQ side did also make a new high close on the move, but didn't really expand the range to the upside all that much. You can see that we basically just matched the previous two high water marks here on this push, but we did make a new high close on the move. Note that volume is starting to fall off here a little bit. We did have a bump up in volume versus the last couple of days, but it's definitely not a surge in volume by any stretch. Here's a look at the Dow futures. The Dow futures are obviously well below the high water mark here, so that's really the big lagger here. We did make a new high close on this move here off of the midpoint of the trend channel, but we're still below the highs by a good margin here on the Dow side. Here's a look at the ES futures. Got to pay special attention here to this 8/8 level. If we do continue higher and break out above the Monday high, we'll put this 8/8 level at 1875 in play. But again, keep in mind it's going to be the last day of the month. The near-term support is going to be where these lows line up. Also, notice how that's coincident with the 10 EMA, which is going to be important if we roll down and start to interact with that to the downside on Friday. NASDAQ futures are also pretty much set up the same way the ES is. If we do break out above the previous highs here, we're going to wind up putting the 8/8 level in play at 3750. Once we get to the 3750 area, look for that to be kind of a magnet here, provide some resistance, much like a major area like the 200 DMA would do. To the downside, the 10 EMA is also going to be coincident with the previous low here and also the week's low, so that's going to be important if we roll to the downside on Friday. I want to take a moment and take a look at a couple of the key the intramarkets that we haven't really touched on in a while. Here's the SOX versus the NDX. You want to see the NDX have strength versus the SOX here to continue to propel higher. Right now we're really struggling here. We had kind of a weak day today where we lost some range in the expansion to the upside here in this ratio. Want to see these previous highs taken out and confirm this new high in NASDAQ. Right now, the SOX has really been underperforming the overall NDX, which is generally not positive for the longer term horizon. Here's a look at the NDX divided by the S&P. This ratio is still positive. We've really been kind of struggling here with the NASDAQ really not outperforming, but we could see a breakout out of this little consolidation that we've been in, and if we do see a breakout to the upside and see the NDX reassert itself, it could be a powerful move. At the same time, the downside of that is if this proves to be too much of a wall of resistance here and we roll to the downside, that could be an important top and a very, very stiff resistance level going forward. All right, now we're going to introduce a new one here. This is a fun one too. This is gold futures versus VIX. This is not a ratio chart. This is just a comparison chart. But I think this is kind of interesting here. If you look back here to the left of the chart here, you can see how the VIX, which is red, was still kind of collapsing here to the downside while gold started to move up. Gold really started to move up here. This is when the market really started to get a little sloppy back in July, and oftentimes gold actually leads the VIX to the punch here as far as predicting when the market may want to make a turn. Right now we're starting to see a little separation here between gold and the VIX. The VIX is still kind of sloppy, but gold's tending to nudge up here. We had a little false start here where we had this one little separation. We did have that little downdraft. Remember, this is a weekly chart here we're looking at, but this is definitely something that could be interesting. Let me flip down to the daily chart and zoom in a little bit. Here's the daily chart. You see that separation a little bit more clearly. So keep an eye on this. Gold generally tends to lead the VIX in turns. The VIX tends to lag the market, so definitely keep an eye on this. This could be interesting. Okay, now here's a look at our multi-sector daily chart. Definitely the better performer today was certainly the banking index. That's the BKX. That was really the better performer of the day. The SOX was kind of okay, but didn't really keep up with the broad market. XAU didn't do too much, which is generally not good for gold. But we're seeing starting to see a pullback here in the BTK after that spike we saw the other day. All right, here's a look at the individual sectors ranked from best to worst. Telecoms, Top Gun, airlines were pretty strong. Defense index was also up there. The cyclicals definitely outperformed the market. Then we saw the Dow Jones transports putting in a pretty decent performance. Pharmaceuticals were okay. The OSX was also fairly strong, and definitely stronger than the overall Dow was. To the downside here, BTK was definitely weak today. Utilities were weak. Gold and silver was also weak, and a lot of the middling areas sectors were just kind of slugging along here. The HGX housing sector is starting to show signs of fatigue, so let's take a look at that first. Here's a look at the HGX, the housing sector. You can see that we still can't penetrate the risk level from the seeker exhaustion, so definitely keep an eye on this. If we break out above this, we're definitely going to put these upper levels in play, 218.75 and perhaps this 8/8 level, but this signal still in play. The one thing that kind of gives this signal a little less power is that the one candle is right here, and our 13 candle has almost no extension above that. So usually when you see this setup, the risk level winds up being, and the signal winds up being more of a pause area than a reversal area, because there just hasn't been enough extension to the upside. That's always something to keep your eye out on. Here's a look at the BTK, which continues to kind of leak back down. It did get back into the gap from 2 days ago, just very slightly. Didn't really give that up yet, but if we do see some more profit taking tomorrow, this could be an area we might find some pretty good setup. So keep an eye on the BTK for tomorrow. Oil services were fairly weak at one point during the day, but they circled the wagons and avoided having a little down day. They closed back above this 50 DMA, which was obviously key support for this session, and even above the 10 EMA. We also have a fresh price flip here. We're 1 day up now in a new seeker startup phase. Here's a look at the SOX. The SOX are still gaining this 8/8 level at 562.5. So if we break out this lateral range to the upside, we're going to wind up being in this overbought area on the GAN box, and we're going to find some pretty stiff resistance at 2/8. To the downside, expect some major support here at the 6/8 level, because that's coincident with the recent breakout area. Here's a look at the pharmaceutical index, which is still on a tear. It's at plus 1/8 and starting to push a little bit higher. This is definitely in the overbought territory on the GAN box, but this has a lot of momentum to the upside. The other thing to keep in mind here is that we're only 5 days up in this exhaustion run, so very easily could get to this plus 2/8 level before it runs out of steam. But keep in mind that we've had a pretty linear move to the upside here without any real downside action. We haven't really had too much activity that's south of the 50 DMA in at least 12 months. So if we do get up into this 2/8 area, let's make sure we're on top of the bar count here to see if we're lining up for a high probability reversal. All right, folks, as always, thanks for listening. This has been Rich for Tradesight. And please, if you find these videos informational and useful, please give us a thumbs up.